Hello and welcome to the chart review. As we've done over the past few weeks, we will take a look at the daily charts of the 6 markets I follow most closely, which are S&P, NASDAQ, Russell, TLC, GLD, and GDX. Let's start with the S&P 500. What you're seeing in front of you is the S&P 500 daily chart, and it captures the segment off of the August low, August 2024, into the new high, and then the decline that followed into the April low. And the decline that followed into the April low went lower than ideal support. So ideally, it would have held the August low, but not low enough to make it likely that the entire rally off of the 2022 low completed. So we are now in the decision zone, and this is the red zone over here. That's the decision zone between a rally to a higher high or a corrective bounce into the zone followed by a reversal. We have reached the decision zone. We've reached it in a stance that does not provide us any answers as to which path is likely. And so now what will be the deciding factors here? Firstly, I want to highlight that we are at the intersection of the 200-day moving average. So that's the blue line or dark blue line over here. And the light blue line, which declined below the 200, that's the 50-day moving average. So as it currently stands, it exceeded the 50. It's close to testing the 200 from below. So from that standpoint, as well as the prior bounce high standpoint, this is a very much a decision area for the near term. So if S&P is able to exceed this bounce high from late March, which is 57.86, odds will favor a push to a new high, new all-time high before the rally will likely top. And if we see S&P break above this red line with the green triangle, it will then be while odds will favor a higher high, we will need to see it holding support. And at this time, critical support, as I see it, is last week's pullback, which is 54.33. So that's right here. It's not marked, but on the daily chart, you can see there was a long candle over here. And a break below it would really be the earliest indication that the structure is falling apart. With a stronger indication that a corrective bounce completed, requiring a break of 51.01. So these are really the near-term parameters. 54.33 on as uppermost support, and below it 51.01. And on the upside, it's 57.86. And it looks likely that this week or maximum next 2 weeks, we will get the answer of which one is playing out. So very much a zone to be nimble in. And in the daily service, we track shorter time frames for potential turns. So the hourly S&P chart that I share there, or the intraday ES charts, is likely where we're going to see the initial indications of which of the scenarios is playing out. So below 51.01, April low will likely be broken. And then the next area of focus becomes 43.33 to 44.83. So that's this area, with potential for as low as 38.65. So that's the 1.618 extension down. And depending on how the downside progresses, we usually are able to refine downside targets if that is the scenario that's playing out. On the upside, for those of you who are Fib savvy, Fibonacci extension savvy, you can see that extensions off the low are the blue extensions, and they point to just above the prior high. So in the 62.49, 65.56 area. And depending on how the break over 57.86 happens, if it happens, I may be able to refine it further as far as where the rally is heading. So that's the S&P 500. Now let's take a look at Russell as next market. Russell is in a different stance. Here it is likely that the rally of the 2023 low completed, given that it retraced almost to the base of it. And the bounce here is favored to be corrective. So the question is how high this corrective bounce is going to go and in what shape will it take. So similar to the S&P chart, last week's low, which is 1925, that's this long candle over here, break of that is the absolute earliest indication that we may have a top. But to make it likely that corrective bounce completed, it would need to break 1788. So that's this red line with the red arrow. In Russell, structure is not as clear as, structure of the decline is not as clear, as well as structure of the rally is a bit more ambiguous. So on the upside, for me to begin considering that something more bullish may be playing out, it would need to exceed 2158, so the top of this red zone. So far, I don't have a path on shorter time frames that points there. So it would unlikely to be in a direct move, most likely would be via larger consolidation towards this 1788 support, and then if it were to produce another push higher. So near term, 1925 is uppermost support, 1788 is next support. If 1788 breaks, it becomes likely that the April low will be broken, so that's 1732, at which time we'd have to see whether it is merely another extension lower to complete what in Elliott wave speak is a extension of an impulse down, so wave 5 of an impulse, or if it's able to stage a break of 1633, in which case it will become likely that it's already in the next larger leg down. So these are the parameters in Russell. Unlike S&P, odds of a higher high are deemed to be low, but it could potentially produce a larger bounce while S&P is making a new high. Okay, moving on to NASDAQ now. All right, so this is NASDAQ 100. And similar structure to the S&P 500, with the main difference being that it already tested the 200-day moving average from below at the end of last week. So that's the dark blue line here. It is closer to the breakout line of 20,292. So that's the prior bounce, I should say, in late March. And similar to the S&P and the NASDAQ, last week's low, which in NASDAQ is 19,011. So that's this long candle over here. That is a break of that low is the earliest indication that we may have a top of a corrective bounce. And a stronger indication will require a break of 17,592. So that's the red line here with the red triangle. If that is seen, the April low will be favored to be broken. So the April low is 16,542. And then the next confluence for the further downside will be between 13,933 to 15,159. So somewhere in this area. For as long as supports are holding, potential for further upside does exist. And again, for those who are fib savvy, blue fibs are the tentative extensions for such higher high. So that points to potentially as high as 23,784. Really, ideally, this should be shifted down. But from a larger degree standpoint, this whole red area is a potential topping zone. So we'd have to see how those breakout happens and how it's able to proceed into the second red zone in order to refine the target. Okay, so now we're going to move on from equities to TLT next. So TLT was viewed as having a substantial bearish potential. It retested the January low in April and came just short of breaching the January low. Ideally, it would have breached it under both scenarios that I was tracking. It came a fraction of, I think, 15 basis points short of it, and staged the bounce. So perspective here, and with the reversal that began last week, there is a substantial risk that last week's high, which was 90.21, is the top of a corrective bounce, and then a strong acceleration to the downside is about to begin. So earliest indication that that is progressing would require a break of 85.98. That's this red line over here with the red triangle. And if that is broken, it will then be subject to remaining below this 90.21 threshold for the remainder of the path down. And to make acceleration down likely, it would need to proceed below 78.58. So that's the second red line with the second red triangle. And if that is seen, it would open up a path to 65 to 70, rounding it to this green area over here. So far has not broken down yet, but it is doing exactly what it needed to do for the bearish path, including that bounce that topped exactly where it needed to top. So really below, for as long as it's below last week's high, it is maintaining a bearish posture. Above last week's high, I would have to view odds of bearish continuation as having diminished substantially, opening up potential for successful retest of the January low. And if in that bullish scenario, it would hold this 85.98 level support that I mentioned, exceed last week's high as an earliest indication of bullish action, and then proceed over 94.09. So that's this red line over here with the green triangle. If that is seen, I will have to view it as heading above the 2024 high, so that's 101.64, into this red box over here. So key decision zone, and so far action is following the bearish path, but must now remain any higher than last week's high would begin to shift the odds away from this bearish posture. Moving on to gold. So in GLD, we have a structure that can be viewed as topping. However, this extension over here was really not ideal for the topping stance. So ideally, it would have topped right around here and reversed. So now, as we discussed in the last video, whenever we get something that is not aligned with the primary perspective, my approach is to be intellectually honest and evaluate what else may be going on. So what else may be going on is it could potentially be viewed as accelerating up, and that potential remains for as long as 292.20 is not breached. And there's another slightly less aggressive bullish potential that exists for as long as 272.58 is not breached. So really, to confirm topping, it would need to break below 272.58 to undo this entire segment from early April into the April high. Now, interesting development last week, and those of you that have access to the daily service should know this, that structure is developing bearishly off the top. So as it currently stands, odds are favoring lower off of the April high. However, it remains, and it likely will breach the 292.20, so the first red line. However, it remains to be seen if it can break the second red line at 272.58. So leaning bearish off the top, but not necessarily, don't yet have a reason to view it as a likely long-term top until and unless it can break 272.58. So if this segment completed, if we have a top here, then we will see a break of 272.58, and next key area to test will be really the between 257 down to 234 on the downside. So it was 200-day moving average currently at 254. That seems like a good upper target to shoot for under the bearish scenario. Now, last chart that we're going to look at is GDX. So GDX is also in a similar stance to gold except that a lot less aggressively so, but it also exceeded ideal topping zone, but remained below the key topping zone. So in GDX, the key resistance was viewed as 57.57, so it topped below it, and action is developing bearishly off of the top. So as it currently stands, I do favor further downside off of the April high. However, it remains to be seen whether it can break below the 40.26 low that was seen in early April. And a break of that is really what we need to begin to favor a lasting top in GDX. So as it stands, a potential for further downside is deemed as high, and a test of that 40.26 or its vicinity, I would even say 43.25 to 40.26 appears to be likely. And from that test, we'll have to decide how likely it is that it's going to break below 40.26 versus hold this area and produce further highs. So no immediate acceleration up. To begin to view it as accelerating up, it would still need to go above 57.57, but with this week's action, odds of that happening have been diminished substantially. So that's it for this week. Thank you for listening.